Well, first of all, thanks, Ben. Thanks to OFA for the opportunity to present this afternoon, I guess. I'm going to go through a few things. Just number one, the first part of my presentation is about the Advanced Payments Program, which has been around for a number of years and is certainly growing in its use. And the second part of the presentation is a little bit about what's going on in the neighborhood of agriculture in Canada. And we'll talk from everything from equipment pricing to interest rates to a number of different things. So with that, I'll without further ado, I'll start here. Everyone see that everything's good on that, Ben, still?
Yeah, you're good, Jay.
Very good. So ACC is a not-for-profit organization. We've been around for about 34 years. What we do is we administer the Advanced Payments Program for the federal government and the Commodity Loan Program for the provincial government and the Ginseng Loan Program for the provincial government. We're a not-for-profit, so we're not doing this for the money. And what we do is we issue funds at prime rate or from 0 to prime interest rates. We're made up of a number of different member organizations. As you can see on the screen, these are most of the member organizations that make us up. A lot of them are in Ontario, some are national, but there's about 190,000 farmers across Canada. Our membership involves about 160,000 of those. So we've got a number of member organizations that govern ACC. Why borrow from us? It's a really good question. Number one, there's an interest-free portion to one of our loan programs. Our loan rates are never over prime. And just so everyone knows, prime rate dropped this morning from 5.95 to 5.45 through the Bank of Canada. One of the things we do is we take on a little bit more risk, whereas because our loans are government guaranteed, there are sometimes products or markets that we will finance that may be beyond the appetite for risk that your financial institution may have. For example, if you walk into a bank and say, I want a $100,000 loan for miscanthus or switchgrass, they're not going to be over eager to lend that, whereas we are. We do understand agriculture. We're deeply involved into agriculture across Canada. The bottom line is our producer gets to save on interest. And as interest rates are coming down, it's a good thing. It may not necessarily reflect on where borrowing rates are at. So I'll talk to that in a few moments. And it's easy to apply. So right today, we cover about 4,500 different products across Ontario to the west to British Columbia. Most of our business is in Ontario, BC, and Quebec, a little bit in Alberta. But there's lots of products that we cover. So if you can think of it, we probably have it listed already. And if we don't, we are always happy to add it. A little bit of how we're broke down on our portfolio is we do an awful lot for cash crop, grains and oilseeds. Over half of our portfolio is grain and oilseed farmers, mostly in Ontario. However, you can see from this, we also do some greenhouse, we do hogs, we do cattle, we do fruit crops, nursery and landscape products. So we're well diversified across a number of different portfolios. So the two programs that we do the most of the business in is the Commodity Loan Program and the Advanced Payments Program. So under the Commodity Loan Program, you can get up to $750,000. I've got here it's prime 5.95. I didn't get a chance to change this in the last hour when the Bank of Canada came out with a new rate. So now that would be at 5.45. What we do is we lend at 75% of the value on this program. So I'll use a simple example. If corn's $4 a bushel, we'll lend $3. There's a variety of different crops. You can go onto our website and see which ones we cover under the commodity loan program. And under that program, you have up to 23 months to pay us back. So we ask that the loan gets repaid when you sell the crop or at the end of 23 months, whichever one comes first. Under the advanced payments program, you can borrow, which is the federal program, you can borrow up to $1 million. Right now it's at 250,000 interest free, and the balance 750,000 is at the 5.45 now, as of this morning. On that one, we lend up to 50% of the expected value. So if corn's expected to be $4 a bushel, we will lend $2. Again, there's 4,500 different products on that program, and you're allowed to up to 18 months to pay us back. So if you get a loan in April of this past year, you've got until September of next year to pay us back, or as you sell the commodity, whichever comes first. We have a simplified application process. We will fill out the application. We ask that you contact us, contact our call center, and talk to one of our folks that we have there. It takes about 20 minutes for the first time you apply. It takes about 20 minutes on the phone for us. We complete the application for you. We send it to you for an electronic signature, and basically you just have to send it back. The first time that you are a client, or the first year that you apply to us, there's a few other things we will ask from you. Usually a copy of your driver's license, your agri-stability or your production insurance number. We will ask you for a void check, so we know, because all of our funds are transferred electronically. And so it's about 20 minutes on the phone is what it takes. Once you are a client of ours, it's about 6 minutes on the phone each year to renew your loan and to complete the application. So it's quite simple, and it's easy and fast. Basically, all we need from you is to know year to year what crops you're growing. We will do the calculation on what you qualify for, and we'll proceed with that. If you have a number of commodities, for example, if you're growing corn, soybeans, wheat, you also have cattle, maybe you have a little side nursery and landscape business on the side, there's only one application, and you can put all of those products onto one application. So it's extremely simple. There's one application fee. I'll get to that in a minute. And again, payments, once you have a loan from us, payments can be done, via check. You can contact us. We can take electronic fund transfer out of your account, or you can go on your phone and pay us no different than you pay your Rogers bill or your hydro bill or cell phone bills. You can do that simply by going on the phone, making us a payee, and sending us money. The application for the loan, no matter how much you borrow, is $1,000. It doesn't matter if you're borrowing 50 grand from us or if you're borrowing $1 million. It's all the application fee. You don't pay for the application fee unless you get the loan. And so basically, if you apply for a loan of $100,000, what you'll get funded is 99. So you never really have to cut us a check or do anything. We'll just take it out of the funding that when we approve the loan and send it to you. Again, as I mentioned a little bit earlier, what information do we need? Proof of Canadian citizenship, which we can do through a driver's license, works for us, or a birth certificate or a passport. If you borrow over $400,000 from us, we may ask for a financial statement. We don't always, but once in a while, we'll ask for your most recent completed financial statement. If you are a corporation, we will ask you for your shareholder registry. That's all we need from that. And again, as I mentioned earlier, we will need a production insurance number or an ag stab number that that we can use with Agricor. The one thing that's on the slide that I want to make sure everybody understands is we can lend with security on three things. Number one, we will take production insurance if you have it. If you don't have production insurance or you're into livestock, we will take agri-stability, which you must have in those cases. And last but by far not least, if you've got product that you've harvested that is already in inventory, so if you've harvested cash crops and they're in the bins, we can take that for security. So it's one of those three things that we're always need to have in order to qualify for the loan. If your bank has a GSA or a general GSA security on you, we'll deal with the bank and deal with that, so you don't have to. For those producers who are already a customer of ours, we will send you a pre-filled application, so that basically all you have to do is sign it. You do have and can have access to your client statement online at any time. Everything we do, we don't do anything paper. So the funds are electronically funded. The payments are taken electronically, unless you want to write us a check. But everything we do is online and electronic. The program, the vast majority of the products on our program start April the 1st. So, but that doesn't mean you have to wait till April 1st to fill out the application. We're actually filling out applications right now for April 1st, so that when that time comes, the money is dispersed on April 1st. I think last year we funded about $600 million on the first day of April. So we like to get producers to fill out the application between now and April 1st at some point, and get it out of the way, get it so you're approved, get it so you don't have to worry about it, and April 1st that money's going to be in your bank account. Our turnaround time from the time you submit and sign an application and send it to us is about 12 days from that point until you get money into your bank account. We're trying to shorten that even further. I think in this past year, and we're just doing the statistics now, I think we got it down to about 10 days. So, but certainly within 12 days, we will have funding out to you. And again, the application fee is $1,000. There are no other fees. There's no hidden fees. There's nothing. It's $1,000 for the application. You can obtain up to $1 million totally on the program. There's always confusion out there this time of year, and I'll take a minute to explain this. Legislation states on the advanced payments program that the first $100,000 is interest-free and the remaining $900,000 is at prime. That's what the legislation states. Over the last 4 years, the Minister of Agriculture has changed that interest-free portion from anywhere from 100,000 to 350,000. And so we are just waiting now to determine if the Federal Minister of Agriculture is going to, what amount he is going to approve. We have requested up to 350,000 interest-free, and but we await the minister and the Minister of Finance and Minister of Agriculture's approval and recommendation that they make. As I said earlier, we don't do credit checks anymore for people, so we don't mess up your credit score. Producers can pay online just like anything else. And again, we do have an application online. If you really want to sit down and do more paperwork, you're welcome to do it. But for us, we'd rather you just call us, let us fill it out for you. And it's a lot easier. I tease producers that if you've got a field that's 20 minutes long and you've got auto steer, you can complete your application going across the field. So for the CLP program, we've just taken the last 10, 15 years on here, just how much is going out each year provincially on it. For the 2024, these stats were taken about a month and a little over a month ago. So we're just over $100 million right now that we'll lend out provincially to producers for this operating loan. And under the APP program, we're up to just over $700 million. So we anticipate we'll be someplace about, we'll fund approximately what we did last year of $728 million for that program in the current year. As you can see, it's been growing. Certainly the interest rates that have popped up in the last couple or last year or so have made people look at the program a lot closer. If on your operating loan you're paying prime plus one versus what we have to offer, you'll save around between $30,000 and $40,000 a year in interest. So that's a little bit about the programs that we offer. I wanted to kind of give an overview or oversight on some interesting statistics and some interesting things that are going on with banking right now. So in 2016, we had 193,000 commercial farms in Canada. In 2024, that was down to 189,000. So we see the commercial farm, the numbers continue to erode slightly each year. What's really interesting is in 2019, farm debt increased that year to $109.2 billion, which was the highest it had ever been. Today, that debt is at 147 billion, which is a new record. And about 17% of all the assets in agriculture are debt financed. So we're seeing fewer farmers, but we're seeing the debt capacity or debt load of those producers going up quite substantially in the last 4 or 5 years. Who holds that debt? Well, there's about $146 billion out there in debt. Chartered banks around 50 bill. Federal government agencies have some. Provincial government agencies hold some of that debt. You'll see down on the bottom the advanced payments program. So there's about $3.5 to $4 billion of agricultural debt that's held in the programs that we offer today. Farm debt to asset ratio. I threw this up here just so you can do some quick mind math, I guess. So it's about 17% in Ontario is a farm debt to asset ratio. So it's saying if you own $100,000 worth of assets, you've got about $17,000 worth of debt on it. This is, again, the average. This also depends on the industry. If you're in some of the supply managed industries, certainly that percentage may be higher. If you're in cash crops, etc., that percentage may be lower. But all in all, if you look across Canada, we're about in the middle in Ontario. Certainly Newfoundland's the highest at 32%, and British Columbia and Saskatchewan are the lowest at about 14%. One of the things we see is that the debt to asset ratio is starting to go up quite dramatically from 2015 to 2020. And you'll see that in 2024, if you take this chart and spread it on out, it's probably close to one of the highest levels it's been in the last 30 years. Our balance sheet in agriculture in Canada, again in Canada, about $923 billion in total assets. Real estate makes up about 3/4 of that someplace. There's a slide here on land values and where they're at right today. But certainly the total liability is about $138 billion. Now the return on those assets, as you'll see on the bottom, is about 2.7%. And the return on equity is about 2.2%. A lot of the growth in assets has been in land values, quota values, over the last 30, 25 years, and we see that continuing to grow. Farmland values in the last year, what they've done. If you look down to Ontario, last year they went up about 10.7%. This year they're up about 2.1%. What we're seeing is farms are farms that are coming up for sale are staying on the market a little bit longer. And because we are seeing that a lot of producers have leveraged themselves over the last 5 to 7 years, either with new buildings, new equipment, or quota. And so as a result, the farmland values have slowed down a little bit in their growth spurt, simply because there's producers are more leveraged, and the demand isn't quite as high as it would have been 2 or 3 or 4 or 5 years ago. Debt servicing. So this is how you're paying your debt in Canada if you're a farmer or a rancher. When you look at this, the amount of your disposable income that you have to use for debt servicing for the last 4 years, 5 years has gone up quite dramatically. So that we're seeing that someplace between 15 and 16% of your disposable income is having to be used for debt payments. And again, this is mainly due because of the position that people have leveraged themselves over the last 5 to 7 years in using capital for equipment, for farmland, for quota, for buildings. And we're seeing more disposable income having to be used for those debt payments. Revenue forecast for 2024. It's expected that farm revenue is going to drop about 3.3% overall. Sorry, it's been going up over the last since 2020. But this year, with commodity prices and everything where they're at, revenue forecast is expected to be down slightly here. In the US, it's a little bit different. The net farm income for producers in the US this year is expected to drop by 27%, or $43 billion from last year's earnings. This is a major jump down for them. It marks the largest 2-year decline in farm income since 1982. And it also represents the second straight year of declining farm profits for US producers. Just a little slide here. It talks about corn, soybeans, specialty crops, wheat, and cotton. The average net cash farm income is forecast to decline. When you look at percentage changes for the commodities, for example, you'll see on the right-hand side, corn net cash farm income is expected to drop by 35%. Soybeans are expected to drop by 41.5%. Wheat's expected to drop by half. So for the US, and again, this is for the US, this is going to put a lot of strain on their farms and on their agricultural economic sector. When you look at heifer and cow slaughter rates, the forecast is up, which is good. The number of beef, what we're finding, feeder livestock has gone down, so there's certainly a pretty decent market for it. And again, what we're seeing are heifer and cow slaughter rates are going up based on demand. Pork production, basically what you're seeing is the demand is outweighing this, demand is greater than the supply. So for those folks who are in the pork industry, we fully anticipate the price will be where it's at or go up in the very near future until that supply and demand line meets. But certainly for 2024 and the first part of 2025, we anticipate a stronger pork market. For those in the dairy industry, feed costs are always tied to commodity markets. Commodity markets where they're at today, we are seeing lower prices than we've seen in quite some time, and consequently, dairy feed costs are expected to drop quite substantially to back to prices where they were in 2020 and 2021. So our forecast is that with commodity markets where they're at, that feed prices should drop. Farm equipment sales. This is an interesting market out there because what we're seeing is the expectation for it to slow in pretty much across everything except four-wheel drive tractors in the next period of time. We look at this and see where the sales of combines, the sales of tractors over 100 horse, tractors between 40 and 100 horse are down substantially, and there might be a couple reasons for this, which I'll get to in the next slide. But again, when we look back at 2021 and you see the large equipment purchases, that's what's increased the leverage of producers and increased that disposable income amount that is needed to pay for this capitalization. Equipment sales of 2024 expected to be around 6.4 for four-wheel drive tractors. Decrease of about 15% in combines and tractors over 100 horse. So again, I just got this up here. If you're looking for equipment or looking at changing some equipment up, for combines and 100 horsepower plus tractors, it may not be a bad time to do that. The problem is where's the inventory? So if you look at the slide that I've got in front of you, it goes out to 2024 back to 2018. This is the equipment inventory levels in Canada today. What we're seeing is that 5-year average, or even the pre-pandemic average, the 5-year average of inventory levels, we are way below that right now. And so even if you wanting to buy some equipment, it may not even be available to buy. So we're seeing there's a lot less inventories being yarded, and it's becoming difficult to find some of the equipment that you're wanting to find, particularly new. What we're also seeing with equipment are people are keeping their equipment longer. If you go back to 2010, 11, 12, things like four-wheel drive tractors, people were trading them off every 3 or 4 years. Today, they're keeping them 6 or 7 years. No difference with combines. Combines, back in 2013, people were keeping them an average of about 4 years or until the warranty ran off of them. And now what you're seeing in combines are people are keeping them past that warranty to a 5 or 6 or 7 year mark. Land values. Land values are all over the place. If you look at, places like Nova Scotia, where an acre of land is $3,900. When you get down to Ontario, and again, these are statistics that were pulled this year, going up to 2023. So we're sitting on average of about 19,000, little over 19,000 an acre, which I guess is about the highest out there across Canada. Certainly when you get to British Columbia, in key farmland areas in BC, land is 50,000 for poor land and 100,000 for good land. But again, a lot of that's not trading, so you get some of the values for BC are I would say this pricing is low. For Ontario, I don't think the pricing is that far off. I've talked to real estate agents. someplace around that $20,000 mark is a um, is a value that's trading today. We have seen it a little higher than that over the last couple of years. But again, 19 grand seems to be kind of the sweet spot right now for land pricing. You do see some higher values going if it's a farm purchased by a farmer close or a neighbor or a family member. So if you're looking for help from the government, this is the government debt as a percentage of GDP. So again, probably not a good place to look because they are having some issues with their debt as a percentage of GDP as it is. Interest rates. So interest rates and the way banking has occurred has changed. And I want to talk about that. So in 2021, committee, the Basel Committee for Banking Supervision, published an assessment, and this was about the time COVID was starting to wind down a little bit. And basically, when COVID hit, the international banking community had a concern of the effect it would have on banks. And so Basel IV included new standards for credit risk. And what that did was it forced banks to keep more assets or more cash on hand and be more liquid. When they did this, it took about $40 billion of lending ability away from the 5 major banks in Canada. So they can lend about between 30 and $40 billion less than they could lend before this legislation kicked in. And so as a result, they've got more on deposits, lower rate, but they've that 40 billion that they can't lend out, they're not going to collect interest on. So one of the things that the bank CEOs have said to me is that so we have $40 billion less to lend. Some way we're going to still have to make that up for our shareholders and our dividend that we like to pay and our investors. So that changed a bunch of stuff in banking because even though you're seeing the Bank of Canada, which dropped the rate again 50 basis points this morning, this may not result in lower borrowing rates. The best example of this was the last decline that the Bank of Canada did, a reduction in interest rates of 50 basis points, changed the overnight rate, but the bond market on which mortgages are based on, in a lot of cases, actually went up, where normally and historically it would have gone down. So it's quite interesting that even though the Bank of Canada rates are coming down, the mortgage rates aren't. And it's one of the things that we want to, or I want to at least make everyone on this call familiar with, is that borrowing rates may decouple, I guess is the best word from some of the Bank of Canada rates. So what I will say to everybody is when you renew your loans with the banks this year coming up, watch for the risk rating that they're putting on you because that will affect your borrowing rates. We know that there have been people that have borrowed at prime or prime minus a quarter or prime minus a half even. And that's going to probably be a thing of the past. Most of the borrowing going forward is what we are told will be at a prime plus number. Number 2 is watch for fees. Watch for the fees that they're charging you. It's one area that the banks do make a lot of money in fees. And they've got some money to make up. So watch the fees that they're handing to you. And the third thing is any additional services that they're selling, just watch the pricing on them because these are all areas that financial institutions have the opportunity to change. And with Basel IV legislation being enacted, this is an area that may provide some additional sources of funding for the financial institutions. And again, I understand they have investors, they have shareholders who want dividends and everything else. But I'm out there spreading the word that just watch your fees, watch your services, and watch your interest rates. If you need to get a hold of us, this is a way to get a hold of us. I think they'll be putting this presentation on the OFA website once we're completed. So feel free to give us a call, and we'd be happy to talk to you.
Great, thank you, Jay. So just a final reminder there for anybody who might have a question, please type it into the chat now. I don't see really any questions as of yet. I see a couple of comments, but I don't see a question. So we'll give everyone a moment or two to write in a question if they have one. I guess I'll ask one to while folks consider if they what questions they might have. Jay, I'm curious for folks watching, is there any tips or is there any paperwork farmers should have on hand before when they're getting ready to make a call to apply to APP or any other programs administered by ACC?
No, it's a good question, Ben. The one thing they need to know is at least thought out their crops for the current year and kind of have an idea of the crops they're planting for the upcoming year and the acreages that they're planting. This can all be adjusted at any time between now and April, or even after April when they submit their final seeded acreage report. We can always make adjustments in it. So first of all, is to have a bit of an idea of what you're going to crop, what acreages and commodities you're going to plant this year, number one. The other thing is if you have an agri-stability PIN or a production assurance PIN or account number, certainly have that ready. That's those two things are probably the most important.
Excellent, thank you. And then I see, so two things. I wonder if you can, Jay, there's a question to provide your contact information again. I think it was in that last slide. Would you be able to bring that slide up again?
Yes, just one second here.
Sure. There we go. Excellent. There it is on the screen for Alex who asked that.
Yeah.
And I see there is another question in the chat now. Is APP only for operating costs, or can capital costs like barns being built benefit from this as well?
The program was set out to originally to be used for operating capital. I know we have some producers that if things come up, we'll use the money for something else. The only thing to keep in mind is that these funds need to be repaid once the crop is sold or at the end of the 18-month program period. There's a lot better programs out there for capital expenditures, buildings, land, that type of thing. So we kind of stay away from that, but there are certainly a lot of different programs out there for that.
Excellent. Thank you for that. Great answer, Jay. Okay, we'll give folks maybe another few seconds here. If there's any other questions, this is your chance. But as another reminder to everyone that I believe this will be recording will go on our YouTube channel. Jay's presentation as well as the recording of the webinar today will also be in our website. And again, Jay's contact info is on the screen there if you need to get in touch at any time. So without seeing any other comments there, Jay, thank you so much for taking the time to talk with us today. A lot of really informative information. We really appreciate it.
Thank you very much for the opportunity. I appreciate it.
Oh, there's one last question that came. I don't know if you want to take a question on tariffs, Jay, but
well, I've been following that, and it kind of was interesting. I see where Trump referred to our prime minister as governor last night, which was interesting. I think that there is no doubt that if the 25% tariffs are going to be put into place, it's going to have some big effect on Canada. I think what the Trump folks don't realize it's going to have a big effect on some of the north and central states, though backwards, because there are a lot of those states that depend on Canadian exports for their own success. So like I say, I don't want to get into the political realm of things, but I think it's going to be an interesting time in agriculture after about January the 18th for a while.
Yeah, agreed. Okay, again, thank you so much, Jay. We really appreciate your time, and thank you to everyone joining us today. Again, you'll see this webinar up on our website within a week or so.
Thanks again, Ben.
Okay, thank you.
Take care.